All right. Testing, testing, 1, 2, 3, testing, 1, 2, 3. The rain in Spain falls mainly on the plains. The ants in France stay mainly in your pants. Well, g'day, mate. Shall I throw a pip off the I can't even say it. It sounds so stupid. Hey, good morning, everyone. Good to see you. Ohio, YJ. Jumbo, everyone. Sorry, Jumbo. Ni hao. Hey, my name is Wayne McDonald. I'm the Chief FX Market Strategist for TradersWay.com, an ECN that allows you to trade Forex, energies, metals, indices, and binary options. Open a live account, please. We're investing into you up front. We're hoping that these webinars provide you skills and success and confidence. And when you're ready to open a live account, you'll choose TradersWay.com as your trading partner for many successful and profitable years to come. Pretty simple goal. We do these strategy sessions every single day, 7:30 in the morning. Monday through Thursday, we do them. You can log in from your private office at tradersway.com. You can also log in from Forex.Today. And every Friday, we host these webinars at fxstreet.com. Let me remind you that trading and investing is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So please stay small and stay humble, focus on the long term, and never risk money you cannot afford to lose. Trader's Way. Trade your way, a Trader's Way with Trader Wayne. Let's talk about pips, baby. Let's talk about you and me. So what's going on, yo? Well, 24 hours ago, we had a trade plan to sell off of the daily 21 with a reasonable potential for yen strength. Nothing more to it than that 21 off of a roll reversal. In simple terms, a lower low predicts a lower high. Not too complicated. It hasn't been a huge move yet, but obviously we're worried about Thursday. Will the Fed raise? Will they not raise? So, people are just kind of jostling for position. That's it. I wouldn't make too much of a big deal about it. Some people are positioning themselves for a possibility that the Fed does not raise interest rates on Thursday. In that case, the probable outcome or likely outcome will be dollar weakness, euro strength, yen strength. So some of that's happening, but not to big degrees. Let's talk about you and me. This is a daily chart. You can see actually volume is falling. Big down day. Traded. A lot of people getting out. Does that make sense? It's not necessarily people shorting. It's a lot of people just getting out of their longs. All right, so Tico says, why would the dollar weaken if they did not raise rates? Well, let me reverse the question, Tico. What will happen to the US dollar if the Fed does raise interest rates? Okay, so if they don't increase it, what's the opposite of strengthening. I mean, it's to say it differently, if they don't raise, it won't strengthen. So what about all the people that bet on dollar strengthening? They have to get out of that bet because it's not likely to strengthen. So what happens mechanically in the market is they exit the trade and they're short Euro USD, so the broker enters a position equal but opposite, which would be long Euro USD. No, it should not stay the same. Just think of it. So the broker now has to enter a long Euro USD. What happens to price? See, Tico, the only way it could stay the same is if nobody placed a trade. That's the only way. So if you exit a short, price goes up because the broker has to enter a long position to offset your short position. Price goes higher. Where are the stops? 85% of the stops are within 30 pips. So what about the other bears that didn't get out? Their stops get hit. And it pops even farther. And now the bears that didn't have any plan freak out. And they start hitting their panic button. Out, 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 out. Brokers enter more long positions to offset those short positions. Price spikes up another level, slams into more stops, more trades are executed, and Euro USD is up triple digits. Just like that. And nobody longed. Sort of like this. Price is falling, but nobody's shorting, as indicated by volume. So if volume's getting lower and price is falling, what is happening? Anyone want to venture a guess? What mechanically is happening? Remember, the only way to move these candlesticks is to enter a position, either to get into a trade or to get out of an existing trade. Those that are long USD yen are not so sure the dollar is going to appreciate. So they're exiting their long, but nobody's shorting. It's kind of a one-way road, isn't it? A one-way street here. People are just kind of getting off the road. What if 10,000 traders decided to get out of their long position right now, in the next 1 minute? What if 10,000 different traders exited whatever position they had, and they were all long previous? Okay, so if they were all long previous, then their brokers have to enter in enough short positions to offset their long. Price falls dramatically, so you get a giant red candle. And what happens to volume? Yeah, less and less people in the market. It's 10,000 less traders in the market. Let's talk about all the good things and the bad things that may be. Let's talk about pips. Let's talk about pips. Let's talk about pips. Yeah, Rod is the only person shorting. Although it was her trade plan yesterday. Where was it? It was like 2050 or something, wasn't it? 2050 to 21 was the short, somewhere in there. Let's talk about pips. Well, Rod, when you see a double top followed by a lower low, two highs, followed by a lower low, what do you do? Whether it's a 5-minute chart, 15-minute chart, 1-hour chart, 4-hour chart, daily chart. That's right. So let me just go back to that. Come on, Bubba. There we go. Let me just go back to that. Zip, 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 zippy doop, zippy doop, zippy doop, doop, doop. Come on now. Man, it's slow out. Maybe I need to beef up RAM. This wouldn't be a processing problem, I think. Come on. Let's go, silly PC. All right. So double top, lower low, lower high. Of course, you could be short a little higher off of this. It's all the same. Oh, I think there it is. I think I have 12, Chaba. Yeah, it's not a lot, but it should be enough. So I don't know why it's so slow. And I have 8 cores. I have an octa-core Xeon. That should be enough for anything. Well, how many trading platforms are you running, pal? Yeah, so I have more than that. So right now I'm running like 100 charts. I don't have an SSD, but it's a SCSI drive, so it's a 15,000 RPM SCSI. So like I don't think I'm screwing anything up. I mean, that's nice, isn't it? But yeah, something is slow. I'll have to complain, but it's trying to run this, so I got a lot of charts going. Solid state is faster if you're doing one thing at a time. The SCSI should be faster doing multiple things at one time. Yeah, and that's the problem. So I got 8 cores, so the CPU shouldn't have a problem, right? So whatever. It's only hardware, baby. So what else do you see going on in here? See how we got the pivots all fat? Red news? That's funny. You mean like communist news? It's a server motherboard. But yeah, James, yeah, important news. Yeah, I trade them all the same, just like I do non-farm payrolls. I use a high volatility event-driven strategy. Nothing particularly complicated. But we're at a pretty big monthly support zone. We're at a midpoint psych level, kind of a pivot cluster going on around this psych level. Be interesting to see if it holds. But right now, when you're looking at USD yen, you see higher high, higher low, higher high, higher low, double top, consolidation, right? Lower low, lower high, lower low. You know, just it's all happening, right? Kind of neat stuff, just doing its thing as it should. And then interacting with the pivots, right? So what is the swing trading strategy? If you're a bear, sell somewhere between this 382 and 618 Fibonacci retracement, right? Which I think low. Where is it? 382, right here. That's the sell zone. Okay. But I think if you're a bull, this is just going to be an interesting area. Oh, come on. Yeah, there it is. I think if you're a bull, that's an interesting area, isn't it? There's something going on up in here. I think there'd be a lot of orders around 19. Right, what do you think? Well, yeah, so the trend right now is down, but what we're more interested in is where is it going to be next week? And so for that, we're going to need the Fed to tell us what they want to do. Now, do you remember me discussing that I didn't think the Bank of Japan was going to do anything in their meeting yesterday, but I thought they would do it next month? So yeah, so anyways, the Bank of Japan came out and no change. Which isn't the most difficult thing to predict, right? So we'll see though if next month, which is I think what, the end of October? October 31st, that is my date of birth. I got to the party and I did it. Right? I did the Smurf. I get it. I got it. I know it's good. My rhyme's all right. You wish you could. Yeah, I think it's at the end of October. I don't know if it's October 31st, but it's end of October. Rod says maybe 30th. Yeah. So, yeah, I'm thinking maybe some more QE next month, which will put yen short right? But there's a Fed meeting in there too, isn't there? Somebody have the Fed date in front of them? October 28th. Thank you. So wouldn't that be interesting? This is where you scratch the beard growing on the tip of your chin and you go, Wouldn't it be interesting if the Fed jacks up interest rates and we get QE, additional QE, maybe 100 trillion yen out of the Japanese roughly at the same time? I have another kind of guess slash theory. The Fed doesn't raise interest rates this week, but they say they're going to raise interest rates next month. They don't do it. They just say hint, hint, wink, wink, nudge, nudge. Right? I don't know. They're definitely going to raise interest rates this year, and December would be too late. I don't know. That might be too complicated for people. But I don't know. That'd be interesting. But, December's quite late in the year. If they were going to do it this year, that's pretty late. But, and there's no press conference in October. But I guess they could just do a press conference anyways. I don't know. Whatever. If it was me, I wouldn't raise. But we'll see. Maybe they painted themselves in a corner. Right? Do. So just ask yourself, hey, Bubba. Is your name Bubba? Ask yourself, hey, Bubba, where's sport resistance? Right? There we go. Doop, shoop, shoop, hey, doop. Let's play it like this for a while. Yeah, what about Guido? Is that Grandpa? No, I think that's Ukrainian. So anyways, there's the real range, right? Don't you think that that's a reasonable range? In fact, it's our pivot points basically for this week. It'll be interesting to see what happens after the event occurs, and we follow on for a while. And what I hope we get is a trend, but I don't think we're going to get a trend. Okay, but don't cry for me, Argentina. What will happen, let's say, when the Japanese add more quantitative easing and the Fed does raise interest rates? Then we'll have a trend. So it's a matter of time. So in the press conference that the Bank of Japan had today, what did they discuss interest rates being currently? What are the current interest rates in Japan according to the Bank of Japan right now? So not hitting their target of 2%, are they? They cut their assessment, the Bank of Japan cut their assessment on both exports and industrial production. More or less flat due to the effects of the slowdown in emerging economies. Inflation expectations were maintained around 0%. What? Holy smokes. Well, that's what you get for jacking up interest or taxes, dummies. So, yeah, so they got to do something, huh? I mean, they only spent 80 trillion. So they're going to have to spend some more, I guess, and lower taxes, not raise them. How could you I still don't get it. How could you instigate an expansionary and contractionary policy at the same time? But they did, so we'll see if they can dig themselves out of that hole. I guess they just thought the economy was just going to spike, right? But we know quantitative, excuse me, we know quantitative easing doesn't necessarily create that. It does devalue the currency. But, I mean, let's talk about that for just a little bit, if you don't mind me going fundamental. Japan would like to get consumption to increase in their population. Is that correct? Wages are low. Retail sales are low. Yeah. So, YJ, you happen to be Japanese. Now that your yen has gone from 80 to 120 in 2 years, that means in about 2 years, the purchasing power of a yen has dropped by 50%. As a consumer in the economy, does this make you want to go out and spend money when your currency has lost 50% of its value in 2 years? Well, there's a problem here then, right? So take it to another level. What did China do recently? Devalue. But isn't it a stated goal of the government to get away from exports, like being an exporting only economy, and to develop a middle class consumer economy? Well, to do that, you need to increase the purchasing power of your currency so that consumers feel like they can go out and buy stuff. And Chinese stuff would be good for a Chinese citizen, but also like to buy Levi's and BMWs and Nikes and Mickey Mouse T-shirts. You kind of need a currency that can purchase these things, right? So I think they're kind of hitting the panic button. Doesn't it feel like that to you? Where they were actually making progress. Chinese products were becoming more expensive. And they're trying to get away from being an exporting nation. Well, then you kind of need to say, well, we're going to allow our currency to appreciate. And yes, exports are going to suffer because our products are not going to be artificially unbelievably cheap. They're going to be more reasonably priced. We're going to be more susceptible to competition. However, to offset the loss in exports, you're going to gain purchasing power of your currency locally for local products, but also for international products. So your local consumer economy should at least partially offset the losses in exports. But isn't that the stated goal? So Alex says, yeah, perhaps they fell back onto old habits. Well, what usually does that? Usually panic. But maybe they need to depeg. But see, isn't that the reason a country pegs to the U.S. dollar? I mean, why would a central bank give up one of its key abilities to manage their own currency. Why would that happen? Because they know they can't do it. They know the government's just going to come in, print money to pay for their debt. So they say, no. No one's going to invest money into our economy unless they know that the economy is going to be managed with proper monetary policy. And so they'll peg to the US dollar to take care of that problem. Cool. So maybe China's at that point where maybe they start to depeg, but it doesn't feel right to me fundamentally for them to cut. But when you look at the USD yen on the long term, the Japanese yen has fallen by 50% in 2.5 years, maybe 3 years. 50%! Right? This is only a 25% decline, even less than that. I mean, so the yen was at 75, now, right? 80, and it went up by 40 to 120. So 50% of 80 is 40. So that's what I mean. It went from 40 to 80 to 120. That's a giant drop in currency, and that's it's supposed to spur the Japanese economy, right? By making exports cheaper, in particular in relation to Chinese export products, right? The only problem is what they should have done is given half of that money to Europe. Because we're just sitting around and waiting for Europe to get their act together. If you're going to be an exporting nation and you're going to devalue your currency, you need to make sure someone wants to actually buy your stuff. Right? Can an economist do much work if all they have is a supply curve? I mean, what does an economist do? Supply and demand. So there's a demand equation a demand curve that's missing. What does finance do? The study of cash flow. Economics is the study of supply and demand. So anyways, they should have given some of the money to Europe and say, you know what? Let's fix this problem, Europe. Get your act together, and then buy some Sony Vios. I don't know if Sony even makes Vios anymore. It's an interesting world how things change, huh? If you wanted to go out and buy yourself an unbelievably expensive TV, you're going to go out and spend what? Unbelievable in America now is only $2,000. So you're going to go out and buy yourself a 70-inch 4K TV for $2,000. What's the likelihood it's Japanese? No, I don't think it's high anymore. Right? What is it going to be? Right? What brand is it? It's not. Nobody buys Panasonic anymore. Nobody buys Sony anymore. Yeah, probably Korean, Taiwanese. Yeah. LG was in there for a while, but LG has lost their market share. But you know what they're doing? They've lost $3 billion in the last couple of years trying to develop OLED. Yeah, so they're hoping they can get that back. OLED, it's organic lighting light emitting diodes. So one of the things that you could do is you can make them ultra, 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 ultra thin because you don't need any backlighting. So you could basically hang it on the wall like a painting. But then you get to this interesting thing. If it's so light, you could make it almost like paper. And it could bend, or you can imagine rolling up your TV, or like having your TV wrapped up in the ceiling like a movie theater screen, and then you hit a button and it comes down, and the screen itself is the TV. And one day, what if you just could paint your whole wall? Just paint your wall, and the paint itself pixelates. Yeah, no, it's all there. So just imagine how thin your phone would be if you didn't have to have backlighting. Of course, you need a battery, but we'll figure all that out. So LG is probably going to lead the way on that if it goes there, but maybe we never go there. All right. So I guess we got to do euro and all that silly stuff. So let me ask you about the euro. Well, it's up. Did you buy it off the 21 on the 4-hour? Here it is. Not much else going on. You'll notice when we go into, event risk, there's nothing going on the short term, so you have to use the longer term charts. Okay. Would you consider this a breakout? Someone would, right? In 12 hours, is it possible this makes a higher high? Yeah, because 12 hours is 3 candles. And you notice how the oscillator drops really fast? It's incredibly steep here, right? Versus even this one. Why is it so steep? Well, what it's trying to tell you is price is not making lower lows. If it was making lower lows, it wouldn't be dropping so fast. It'd be much flatter. Okay. And if it stops making lower lows, which it has, and then suddenly makes a higher high, this thing's going to just drop straight to the overbought and then crank itself up. Pull one of these maybe. Okay? See how, right? Oscillator falling, 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 not making highs, not making highs, not making highs, not making highs, not making highs. Oh, it even came down on end. Whoop! Pop. So if this thing keeps moving sideways, eventually the oscillator could just pop on just a little higher high in here. So what would create a higher high in here if you were a bull and you were on a 1-hour chart? What would you see? One, two, three. Okay. No, that's a reversal pattern. Is there something, I don't know, let's say less conservative? What would be more a simpler indicator? Because you're only using the hour to predict whether the 4-hour is going to do its thing. Okay, well, let's take a look. Ron, that'd be like a double bottom. This isn't very helpful, is it? "15-minute chart is not much better. So keep an eye on it. "15-minute is worthless too, but prepare. What do you want to do with your trade? So start with the hypotheses, of course. If this breaks to the upside, then I will, and then fill in the blank. Oh, this is a Head and Shoulders? No. No, I guess let's discuss that if you want. Let me draw a Head and Shoulders for you, and then I'll make a couple of distinctions. So first of all, you have to be reversing something because it's a reversal pattern. A lot of people will do this incorrectly right off the bat because there's no trend, and they're like, this is a reversal pattern. I'm like, well, what are you reversing? Oh, well, yeah. Think about it. All right. Is that a reasonable Head and Shoulders? Okay. Let me make a change. Is that a Head and Shoulders? No. No, it's not. So first thing is you need the fib, okay? You need to break the fib, okay? If price had stopped here and then consolidated, I would still assume it's going to make a higher high. I'm not going to short in the middle of a fib zone for a bull. Okay? As Marina says, basically, if you can't call this a Head and Shoulders because there's no neckline. Okay? That's just a failed extension and something else was going on somewhere else that you missed. Okay? But if you have a neckline, or if your retracement is 100%, let's do this again now. Anything greater than a 786 retracement is not a retracement, but a reversal. Well, stop listening to those people, Jimmy. There's no such thing as a slanted Head and Shoulders. That sounds ridiculous. Yeah. I'm obviously exaggerating for effect, but I'm speaking the truth. Okay? So look, do you really want to buy something that's retraced 78.6%? Let's just call it 80%. An 80% retracement. No. Look, it's dead. So that's where you start to look for lower highs that will predict a lower low. But look, if you short something like this, I think what's happening is you're going back and you're with confirmation bias calling that a Head and Shoulders and then say, oh, well, that'll explain everything. But that's not really what's happening. So don't make it too complicated. A reversal pattern starts with a failed extension, okay? Which then would predict, a lower high, and that's where the head and shoulders comes from, and you would draw your fib like this. Okay? So let me change this up a little bit. That's so funny though. Slanted. I honestly have never heard of a slanted head and shoulders. I mean, what kind of reversal pattern is a slanted head and shoulders? I'm trying to think. I mean, I don't know. The next one is my favorite. Can I show you one of my favorite? Like almost like free pips type stuff. It's a slightly different version of this. And it's called a crown, but you can call it whatever you want. Because I want you to note something. No matter how you draw your head and shoulders, you can get rid of everything on the left. You don't really need it. The key here is the fact that it made 100% retracement. That's all that really matters. And this up here should be resistance anyways. Let's say a reversal pivot point, psychological level, and all of a sudden you get this 100% retracement. I mean, even a head and shoulders most of the time is just way too complicated. Come on, dude. The most important thing is not looking for this pattern. The most important thing is looking for support and resistance, where trend could possibly be reversing. So as price is going up on the left here, you should already have a plan to sell up here. Now, not just to sell when it touches it. That would be a gamble. That'd be a bet. You'd say, oh, well, price is going up, but I bet you anything it's going to fall. Well, that's degenerate gambling, and that's an embarrassment. Your mother would be ashamed. She would turn her head away in shame when she saw you trade like that. Oy vey. So what you want to look for is, all right, this is hardcore resistance, and this thing's going to drop like a ton of bricks with two hammers on it. And sure enough, wham, 100% retracement. We can't have an 100% retracement in a trend. So you say, aha, I knew it. And then, but there's going to be some dummy in there that still buys it, right? Think about it. Some dummy is still going to buy it. That's the beautiful thing about Forex. There's a lot of people, right? 95% of retail traders. Some dummy's going to buy it because he still doesn't get it that it's over. And the reason this collapsed is not the bears, guys. The reason this collapsed is it was resistance. So what did the smart money do when they were buying it up here? Because obviously they were buying it if it was going up in a trend. And then it slammed into obvious resistance. So what do you think the smart bulls did? They took profit. Well, what about all the retail traders that are slow as molasses on a cold Georgia morning? They decided, oh, well, I'll buy it again. Or I'll buy it now for the first time when it's too late. Yeah, that does mean get out. Yes, take their profit and they get out. So some dummy buys it again, which is good. This is good, because this is where we come to play. Again, the smart money says, well, I see the divergence in the oscillator. I mean, very often you see stuff like that. But the fact is it was trending up, slammed into resistance, dropped like a ton of bricks, and it starts heading up again. Well, you could say, well, some dummy got onto that. And where would that dummy place the stop loss? I don't know, somewhere around there, right? Oh, man, free money, right? And so that's where you fib it. And you're like, oh, this guy is so slow, man. He's slow. Taking pips from a baby. And then wham, you sell it there and he panics. Then he says, oh no, it's not going to break resistance. I'm late. And boom, 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 boom. Right? That's why it works, guys. Not because there's some silly pattern. Come on. right? Slanted head and shoulders just sounds funny to me. I don't know who made that one up. All right, so that's not even my favorite, but the reason I bring that up is so that you just understand why it happens. Bulls took profit here, and the bears sold here. And whoever bought it here was just lame-o. Oh, boy. Right? It dropped like 100%, and he still bought it. Hello? Right? Well, Alex says, do you think big players think like that? Well, on the time frame, sure. Yeah, absolutely. Because all they're doing is identifying support and resistance, guys. Okay? All right, so anyways, here's my favorite one, even easier. Thank you, Jimmy. Here's the easier one. This one I love. And somebody calls it a crown pattern. I don't care what you call it. But it's sort of a distant cousin of a head and shoulders. The key here is there's support, and oh snap. Is that a lower low in an uptrend? That's the one I like. That's the one I like. That's bread and butter stuff there. Bulls were in control. We were trending nicely, slammed into obvious resistance, and everybody got out of that one. And some dummy bought it. What a dummy. Well, you got to set the market correctly when it's mispriced, right? That's your job. And that's where you sell it. You can draw a fib too. I mean, I don't care. It's all the same. Whatever. Okay, and that's the crown. And sometimes, it'll slant. If you want a slanted one, I'll do a slanted one. But, look, it's all silly. Even calling it a crown or a head and shoulders is also really kind of silly. It's not that complicated. Oops. That wasn't supposed to be that way. The issue is, the reason I say it's not that complicated and that it's silly is because you should have seen it coming before it happened anyways. Look, if this was trending up, and you should have seen this as hardcore resistance, and you should have been kind of like ready, like, oh man, if it reverses. And then it just reversed hard, man. Hard. And some dummy still bought it. And it comes up, and like you should just, but you should have anticipated this happening while it was going up. And a lot of people don't see it until after it's happened, and then make that inverse. Wow, some people just can't see it if it's upside down. They're like, I can't do that. But the only part I care about is the stuff to the right. Okay, that's all I care about. Is we slammed into resistance and it dropped 100% or more. And I bust out a fib and I sell the lower high. All it is a lower high. I don't care about the crown. I don't care about the head and shoulders and all this kind of stuff. All it is the trend is over. Some people get really caught in all the rules and stuff. So one thing you could do is the distance from the peak of the crown to the new neckline is going to be is going to be the new target for the breakout point. So now your target's going to be down here. Okay, fine. If that helps you, fine. I don't like to trade with such silly rules. I mean, it can go wherever it wants to go. But sometimes it's a helpful guide, right? I know all the rules. But I think as you mature, you start looking at things and you say, oh, well, there's a psych level 3 pips or, 13 pips below, so I'm just going to go there. Why? The support and resistance is much more important than all these little silly rules. right? Oh, the peak of the crown to the neckline is going to blah, 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 blah. But see, that's just my personality. I'm an entrepreneur by design, by birth. So you give me rules, and I want to break them because I think your rules are stupid and makes everything complicated and inefficient. Right? More rules you have, the more complicated it is. Complication means it's breaking, it's not going to be efficient, and if it's not efficient, it's going to be a cost. You're losing money somewhere. Get rid of the rule. Right? Or prove to me the rule is necessary. So I look at this, I'm like, okay, fine. Just sell the lower high, dude. Why make it so complicated? And you guys know the story where the very first Forex conference I ever went to, I was a speaker, and then I started going to other people's presentations because, I'm like, man, I haven't been a professional that long, just a, I'm just a kid. So I go see someone else's presentation, and he spoke, for about 45 minutes into his 1 hour presentation about Gartley patterns, Gartley butterfly patterns, and he went on and on. And this, if this was 16 degrees of this, then this other thing was going to be a 64 of that, and then therefore this other thing. And he's going into all these complicated patterns. I mean, it was ridiculous. And he gets to 45 minutes into the presentation, and he realizes he's made a mistake on his slide, and there's nothing he can do about it now. There's no time to fix it, and he just kind of says, well, that's it. Like, what? Why didn't you just sell the lower high? It takes me 2 seconds. Okay, retail sales, 0.2, slight miss. It took me less than 2 seconds. Took him 45 minutes and he still screwed it up. Empire Manufacturing, terrible number. Terrible, terrible, terrible number. Doot, 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 doot. No response out of the dollar index. Oh, slight increase in the dollar index. So, yeah, look, guys, nothing happened. Yeah, terrible number. Negative 14.7, so basically negative 15. Terrible number. They expected basically break even, but nothing happened. Dollar index now just slightly higher. Just slightly higher on the dollar, on the Dixie. So if you were going to sell here, your target would be support, right? You want to watch the orders? Let's do this on a 5-minute chart. Let's talk about all the good pips and the bad pips that may be. Let's talk about pips. Let's talk about pips. Right? So you guys know the event-driven strategy. I'll just do it in here. So you sell a retracement. Look at orders here. You see the order here, 8? The entire market wants to buy 8 lots. 8 versus 20, 50, 20, 20, 40, 50, 90, 90, 90. But whatever. How do you know if the lower high is confirmed? And well, look, that's why they invented stop losses. So there's no guarantee anywhere, right? You see the buyers, man, they bought all that up. Amazing. How you say in English? I would drop to a smaller time frame. Okay, pal? So if you were trading an hour or a 15-minute, drop into something like a 5-minute and get like a confirmation there, either an oscillator or a 5/8 cross. Okay? Or even a 1-minute. Right? and you place a stop. And if you use a 1 minute, your stop's going to be close because it's going to be very close to your entry. So if you, let's say you shorted a 618 Fibonacci retracement, right? You're going to short that Fibonacci retracement. It turned out to be a 618. Then you got a 5-8 cross down on a 1 minute chart. You drop a lot, and now if it makes a higher high, you'll get out for a small loss, but your small loss might only be like less than 10 pips away. Look at this, guys. All those orders that people were buying, there was only 8 orders short. Amazing, huh? 8 orders short, 90 orders long. Pretty amazing stuff. So if you're a bear, you would sell right in here. Right? Right at our resistance line, right? You going to do it? Right? You go click, and your stop would be here. And in your trade journal, you say you sold a 786 Fibonacci retracement near resistance. And it's a range trading strategy, correct? Are we in a range? How many pips am I risking here? 15? Let's see what happens. I'm not saying that's the right thing. I'm just saying if you're going to trade it as a 786, if you're going to trade it as a range, drop a lot. I didn't even place I don't even have a OCO on this. So anyways, if it makes a higher high, get out. What's the big deal? That's okay. The retracement there, that's not really a retracement. That's just volatility. Okay, we're looking at a very small time frame here, and what it did on the news is it popped up and then dropped and came right back. So I consider this a 786. But even then, look, we're range bound, right? That's it. We're range bound, and I'm trading the range. Like, I'm not trying to make things complicated. I'm trying to make them easier. If it's going to go down, it's going to go from 20 down to 80. Okay, so that's basically 40 pips potential. And I risked what, 10 or 15 maybe? So let's just call it a 4-to-1 risk-reward ratio. And I'm simply trading the range we identified before the news came out. And I'm buying dollar and selling euro. I don't know. Does that sound stupid? John, I always use OCOs. I just don't have it on this platform right now, but I can do it this way generally. Okay, I throw it down that way. Hey, look at that. I'm making money. I'm making money. Baby, if you ever blunder like the day that you met me. Living on the air in Cincinnati. Still a lot of big orders. Just a little scalp. Cool. So you could take profit here if you wanted to. Baby, if you ever blunder, blunder, do, 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 do. So you got to watch the psych level. Living on the air in Cincinnati. Well, I'm about 20 pips profit now. And I'll make this 30. I'll move the stop. Cincinnati WKRP. Sorry, good stretch. I need a good coffee. Oh, hey, good idea. All right, so Powell asks a good question. Why place the stop above the entry, not below? All right. All right. If I make 1 pip, what does 1 pip mean for me? Okay, profit. So I get to tell an investor, I'm 98% profitable. Okay? Wow, Wayne, you're 98% profitable? You make profit 98% of the time. You're like the best trader in the whole world. I want to give you all my money. And then they're like, well, what's your average win? All right. So what if half your wins are 20 pips and half your other wins are 1 pip? What's your average win? Well, who cares? You see what I mean? Like you're diluting your winners. Angel, if you open up a live account with tradersway.com, I'll hook you up. It's free. Don't worry about it. You just got to open up an account. Cool. Your MT4 is a gap. I don't want to because I have to change this out. If I do it, watch. If I switch it, I'll give an error. Do you want to really stop the quick deal? No. Notice the orders, guys. Do you remember how the market was frozen? On one side, nicely balanced. But anyway, so here's the thing, guys. Nobody cares if you make 1 pip or lose 1 pip. Okay? Do you understand? Nobody cares. Hey, man, I win almost all the time, but the vast majority of my winners are 1 pip. Like, who are you trying to fool? Nobody cares. Nobody cares about your winning percentage. That's not what they care about. No professional investor goes through and says, oh, wow, your winning percentage is so high. I mean, nobody cares except an amateur. But statistically speaking, though, when it goes into your stats, what if my average win was 20 pips? Because I'm not taking the +1. Okay, you understand? So now my winners are twice the size as your winners. We made all the same trades. And now let's talk about your losers. What's the average size of your loser? Well, let's say your loser is 20 pips, because when you lose 20 pips. I made the exact same trades. Half my losers are minus 1 pip, and the other half of my losers are minus 20 pips. What's my average loss? $10 pips. So let's look at it. Your average winner is plus 10. Your average loser is minus 20. My average win is plus 20, and my average loser is 10. So your winners are half the size of your losers, and my losers are half the size of my winners. I'm a better trader. I'm the greatest trader in the world. That's why. Does that make sense? Yeah, well, so Greg, so what I'm saying, Greg, it doesn't matter statistically unless it looks good. Still doesn't matter. We still made the same amount of money, but what do you think actually ends up looking better? I have a lower winning percentage, but I'm profitable, and my losses are small and my winners are big. Which one would you invest? All else being equal, we made the same amount of money, but I have small losses and big wins. What do you think is more likely to be attractive? Yeah, but it's important though, isn't it? I mean, who else gives you this information? Right? Where do you even discuss this stuff? Yeah, so Pow's like, I have lots of small winners and lots and some big losers. Well, that's not what you want, is it? So just tweak it a little bit. Yeah. How cool is that, huh? Hey, just trying to help. Just trying to help. Hey, it's pretty late. I started at what 7:30. It's 8. So we've gone the hour and 15 minute. Sam says, why did it get weaker after the data? There were more sellers. Did you sell? My trade's right there. I sold at resistance. There's my target. I sold at resistance, and I'll exit at support. Or I can take the 25 pips now. Well, since we're ending, why don't I just do that? And we'll end it on a good note. Zoop, zoop, ba-doop, zoop, ba-doop. All right, only 21 pips because of the spread. Boom! Winner, winner, chicken dinner. Peace on earth. Oh, now you want the one. Wow. Okay, let's go to the 1 minute. Okay. What do you want to see on the 1 minute? I have a small gap on the fall. All right. Are you with Traders Way? Okay. Is it a live account or a demo account? There you go. That's why. Any broker is going to take the data and the bandwidth. Let's just imagine there's only so much bandwidth. Okay? Let's say there's a finite amount of bandwidth to serve everybody, all their customers and all their clients. But every once in a while, like after news, a bajillion orders come in. But everyone wants to trade at the same time, and we saw the orders just light up. Well, they're gonna have to steer the availability, obviously, to those trading real money, which Traders Way did. I don't have a gap. It moved beautifully. And then things calm down, and then they can share it with the demos. All right, but don't worry about it. It's all good. Yeah, you can see mine smooth as a baby's bottom. The other way you could have traded this is with binary options, guys. Awesome opportunities. Okay. All right, guys. I love you, babe, but I got to jump. Peace on earth. May the pips be with you. May your profits be above average. Toodaloo. Marcia, did you just say that the Euro USD behaves like a slut? Wow, what a potty mouth you have today. That's pretty funny, though. Looks like taking profit was a good idea, huh?